Look, I think the biggest protection, to be honest, from a market correction is always to make sure you're holding good quality stocks. It sounds easy, but good quality stocks at the right price. So I guess we go through our portfolio every day to make sure that perhaps when everyone's not as confident as they are today, which could happen tomorrow, next week, next month, nobody knows when a market correction can happen, is really to make sure that what we own in the portfolio, makes sense from a share price point of view. That's our biggest protection.
Okay, so nothing materially changes when we come into a period at the moment where an argument could be made that things are a bit toppy and the volatility is so low. You don't change anything materially in the portfolio? Not
really. Again, you've just got to look at your portfolio, look at the valuations. I mean, a lot of things are sort of at the top end of their valuations, and maybe just selling the things that look a bit expensive. Just taking some profits off the top of a few things. Yeah. I wouldn't be chasing the resource sector at the moment, which has had a bit of a bounce. I think that's a very sector strategy, a very risky strategy to chase a sector after it's sort of bounced so strongly. If anything, we'd be looking to take some profits, on some of those sectors. So, but it's really about focusing on the underlying stocks. Look, we've just paid a big June distribution for our funds. That's just been paid. So we're sitting probably around 5 to 10%, five-ish. Yep. Probably looking to build it up a little bit at the moment. So we are taking a bit off the top of a couple of stocks that look a bit expensive.
Okay. And what's as an historical average for your funds? Where would cash normally?
Well, we can hold up to 10 in our large cap funds and up to 20 in our small cap. At the moment, we're probably a little bit below our normal range because we've just paid our distribution, but we just want to build that up cautiously in the next month or so.
Okay. Now you're part way through the capital raising for your new LIC. Mm-hmm. In terms of market opportunities and how long it would take you to put that cash to work, have you formed a view on how you would use the money?
Yep, so we've said, look, we're trying to raise between 1 and 200 million. We've already said, and it's in the prospectus, that we'll take up to 6 months to invest that money. Mm-hmm. So hopefully we'll get the money mid-August, and it'll take us 6 months to get it up to 75% invested. Okay. And that's the sort of time period I think we need. I think, the market has been flatlining, sort of drifting up, if you like, really not having any sort of meaningful correction at all. I would expect the volatility to increase at some stage going forward. There are still a number of uncertainties in the world. Europe still has its issues. The US now, it looks like it's picking up. There's talk of perhaps their rates going up at some stage. So look, there are enough things on the horizon to see a period of volatility ahead. And we'll be using that to invest the money.